Where's the best place to invest in 2018? I think we all know 2018 is going to be a very different year in property. So today we're going to discuss what's happening in each state around Australia and what you could expect to happen in our property markets.
Are you interested in property investing, success or money? Well, you're in the right place. This is the Michael Yardney podcast, where each week you'll learn a number of new ideas regarding success, property investment and money in 20 minutes or less. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property advice. Now here's your host, Michael Yardney, who has once again been voted Australia's leading property investment advisor. That's the fourth time he's won a similar award in the last 6 years.
Hi and welcome to this week's show. In particular, welcome to all the new listeners and thanks again for the returning listeners, because we're going to have another interesting year in property, and today that's what we're going to discuss. What's ahead? What's the best place to invest in Australia? What's happening in each state? And I'm going to be joined by three experts, and I'm going to explain a bit about what my predictions are for 2018 as well. You see, 2017, last year, saw some significant changes in our property market. I mean, the year started with a bang, and it finished with a whimper, didn't it? And in the middle, foreign investment slowed down as we took away the welcome mat. We raised stamp duty, we hiked land taxes, we gave other disincentives to foreign investors. Last year, APRA slowed down lending. They made the banks restrict lending to investors in particular. They restricted interest-only lending. They changed serviceability criteria. Remember back in the middle of the year, there was that surprise move by the government in the budget where they announced sweeping changes to depreciation laws, wiping out depreciation allowances on any new investment, not older properties that you owned, any new investment of established properties, not new properties, I've got to make that clear, I guess, but any new purchase of an established property may be a better way of saying things. 2017 will also be the year when first home owners came back, first home buyers. There were more than 94,000 first homes bought across Australia last year. And that was a significant increase. And that was, of course, by the government, some of the state governments giving some incentives. 2017 was also a year where there was a significant oversupply of apartments, particularly in the CBDs of our capital cities. And 2017 will be looked back as the year that investor sentiment eased, especially in Sydney, where the headlines changed from boom every week to flatlining and even some doom and gloom predictions. So over the last year, property values rose 5.5% across all the combined capital cities. But as always, the property markets were fragmented. Over the year, only Melbourne and Hobart recorded value growth more than 10%, and again, Perth and Darwin's property values decreased last year. If we go back to 2017, Melbourne grew at 10.1%. Hobart grew a bit faster than that, but I'm going to talk to you a bit about my thoughts on the Hobart market in a few moments. And Sydney grew at 5%. Before we start our whip around with our Australian property experts, I want to explain that once a year I do a series of seminars around Australia in Melbourne, Sydney, Brisbane and Perth. And with me this year is going to be Australia's leading independent property economist, Dr. Andrew Wilson, and my business partner in Metropole Wealth Advisory, Ken Race, who's going to talk about properties and structuring and tax, and also local property experts. So if you'd like to attend those seminars, they normally cost $99, but as a listener to my podcast, I've never done this before, you can come for free. So go to propertymarketupdate.com.au, put in the coupon code podcast, and I'd love to see you there. Property Market Update, coupon code podcast. And I look forward to catching up with you at my national property market and economic updates. So now I'm going to turn to a couple of guests to help me understand what's likely to happen in our major property markets in Australia in 2018. Let's start our whip around Australia with Sydney, the harbour city, and with me now is Ahmed Imam, Senior Property Strategist of Metropole in Sydney. Hi, Ahmed.
Hi, Michael. Always a pleasure.
So what's happening on the ground in Sydney?
We've seen quite a bit happening. I mean, it's been a, let's say, productive last 12 months. we're seeing plenty of stock available in the Sydney market at the moment. And of course, not all of it is investment grade quality, but we certainly have lots of opportunities to secure investment grade asset at the right price at the moment. So keep in mind that due to all the media attention around the Sydney property market at the moment and talks about affordability constraints and the market crashing, the market sentiment in Sydney is quite low. And as we mentioned on previous podcasts, when people are fearful, Michael, they tend to hold and procrastinate. So we're seeing many investors holding to see how Sydney will perform over the coming months, or they're looking across the borders to potentially investing in Melbourne or Brisbane or other cities. And look, I'm a big believer in borderless investing, and just because I live in Sydney does not make me biased towards investing in Sydney. I personally invest for long-term capital growth, and if I'm going to get the highest and best use of my funds in a city other than Sydney, then it's an easy decision for me. But that being said, I don't want investors to have any misconceptions or fears about the Sydney property market and how it's going to perform over the next 12 months. So I think it's important we provide some realistic expectations.
Sure. Well, my expectation is that the prices in Sydney will be higher at the end of the year than they are now at the beginning of the year, but not as growing as much as they did over the previous 12 months. Having said that, there are markets within markets, so there are some areas that are still going to do well because there is a shortage of A-grade properties, there is a shortage of investment-grade properties, and people are still getting married and still getting divorced and still having babies, and maybe not in that order. People are still buying good investment properties. But yeah, you're right, I do notice that people are sitting on the sidelines waiting for things to happen. So No crash in sight, but what are your expectations for the Sydney property market?
Look, it's two main expectations. Expectation number one is you cannot expect the same level of growth that we saw over the last 4 to 5 years, okay? Because that was unrealistic levels of growth. You can't expect double-digit growth over the next 12 months. What you can expect and what we're seeing is stable and realistic levels of growth. As long as you're being selective and you're buying the right properties in the right locations. The second expectation, Michael, is that you will not see much growth if you're investing in secondary locations. Okay, so this is not a time for speculation. This is not a time for hot spotting. This is not a time for investing in a suburb that some salesperson has assured you will be the next big thing. This is a time for boring investments. That means that this is a time to focus on proven locations that have shown historical evidence of stable and long-term growth, and also have the correct demographics and socioeconomics to suggest that future long-term growth. Now, I know that doesn't sound exciting, but it's safe and it works.
What it really means is that there's a flight to quality at the moment where people are actually looking at the better class assets, as we said a few moments ago, which really means that things on secondary main roads, on main roads, in the wrong location, in the block of apartments, are being left behind, taking longer to sell or not selling at all or selling at significant discounts. Now, that doesn't mean you should get in and buy them because a secondary property is always going to remain a secondary property. During the boom, everything was lifted up and everything went well, but in the difficult times now, you can actually see what is a good investment property.
Yeah, that's right.
So what are experienced investors, those that you're dealing with every day, doing at the moment?
Well, the exciting thing about this is that because people are generally holding and procrastinating at the moment, there is now much less competition at auctions and much less competition for private sales for those A-grade assets that we really like. And because of the current market sentiment, the vendors and the sellers are now much more receptive to selling those A-grade assets at or below its intrinsic value. So experienced investors are seriously taking advantage of these times and they're getting themselves some really great deals.
To round this off for Sydney, what tips do you have for our listeners, Ahmed?
Okay. You will find the greatest economic growth drivers in those proven locations in select residential suburbs in the inner middle rings of Sydney. Okay. And once you've selected that right location, you then focus on the right property within that location. You don't do it the other way around. Remember to always focus on capital growth and that future value of an asset. That way you're always ensuring the investment is the highest and best use of your funds. And it's time to throw away that crystal ball, stop the speculation and stop the hot spotting.
I like what you said because what I guess the message was there is choose location first. I find people go out for a weekend, look at a property, like the property, then work backwards from the property and try and make the location work for them. Wrong way around. Since we know that the location is going to do 80% of the heavy lifting of your investment, choose the location first, then choose the right property in there. Okay, well, thanks for that. It'll be interesting to see how 2018 pans out for Sydney. Thanks, Ahmed.
Looking forward to it. Thank you, Michael.
As we whip around Australia, my next guest is Kate Forbes, National Director of Property Strategy in Melbourne. Welcome, Kate.
Thank you, Michael. Pleasure to be here.
So what I'd like to discuss today is where you and your research sees the Melbourne property market going in 2018.
Absolutely. In my view, I don't see it going terribly different to how it performed in 2017.
And why do you say that?
Bluntly, because the fundamentals haven't really changed.
Being?
Your primary drivers of property price growth are population growth and also the ability for people to continually pay and push up the prices. And that's a proxy for that would be employment growth.
Well, clearly Victoria's punching much above its weight in employment growth. Wages growth going up with it as well, because a lot of them are full-time jobs, and very many in the finance sector and sectors that are paying more compared to maybe the blue-collar jobs. We're no longer a manufacturing state, but I guess we're getting lots of new residents as well.
We are. Last year alone was 144,400 new residents.
I think what that's done, Kate, is the oversupply that was anticipated in the new and high-rise buildings has actually been soaked up. That doesn't mean property values are going to go up, but we don't seem to have a lot of vacancies at the moment.
We don't. Last I looked, the vacancies were sitting down around 1.8%, which is near the lows reached at the 2010 cycle. It certainly doesn't speak to an oversupplied situation.
Sure. So looking back in 2017, the Melbourne market has been reported as losing some steam, but it actually did pretty well.
It did, 10.1% in fact.
Houses did better than apartments.
Unit values rose by 8.7% last year, which is still a cracking number.
Sure. And this year, it probably won't be as strong as that, but I agree with you with the fundamentals. A couple of things have slowed down property price growth, though. What do you see having slowed us down a bit?
Finance is a big thing in terms of the availability of finance for investors, and it's cramping the number of people that can get into the market. We've also had a bit more of supply in the apartment space than would be the case in other types of property. So that's placing a little bit of a cap on the capital growth of certain types of property and in certain areas.
If you look at the inner city and off the plan and new apartment market, the foreign investors seem to have slowed down a little bit as well.
Finance for them is also very difficult, and there's a number of new taxes that have been introduced that I guess is slowing down the demand or the appeal for them.
Sure, they've pulled away the welcome mat from them, but there's another one in the pipeline as well that I find interesting, and they're talking about bringing in what they're calling a window tax, or they call it that overseas, where properties that are vacant for 6 months are going to have a surcharge charged on them, and the state government thinks it's going to be a great revenue raiser. What do you think that's going to do? Are all these properties suddenly going to flow on the rental market and oversupply us?
I don't think so, no. There will be a small amount for whom that additional tax or vacancy tax will lead them to either tenant the properties or, in some cases, to put them on the market. But in general, those investors who have purchased those properties with the intention of chasing the capital growth and holding them for the long term aren't going to be fazed by an additional vacancy tax on the properties.
Look, I think I agree with you, because they've got a different mindset to you and me, who are looking for a combined return of capital growth and rental return. They more frequently like leaving their properties vacant because many Asians believe that the vacant properties are going to be worth more, or they're keeping them just in case for their family, for their children, or for them to come to Australia in the future.
Yes, that certainly does seem to be the case, and if it's an additional $5,000 per year in order to have that untouched property, they'll be happy to pay it.
So what sort of properties are going to make a good investment in Melbourne in 2018?
very much the same sorts of properties that always make a good investment.
I'm not surprised to hear you say that, Kate.
It should always be a long-term strategy, and that shouldn't be something that changes year in and year out. So it's your inner to middle ring affluent suburbs in Melbourne. That's your inner south, inner eastern suburbs, and it'll be the areas that are built out and that have a reasonable supply cap in what can actually be built out there. So villa units and houses and your older style established flats.
Look, I agree with you. Now, I know some people are saying, yeah, but last year the outer suburbs did well. They did well in two areas. Number one, that's where the growth corridors are. There's a very big growth corridor in our southeastern corner of Melbourne, and there's quite a significant growth corridor in the outer western area. So yes, you're going to see large population growth. Often you'll also see median prices change, but interestingly, it's often related to the change of the nature of the property, that all of a sudden there's lots of new building. But my concern with that is the rising tide of last year lifted all ships, but as our markets are slowing, this year those sort of buyers are going to have a bit of a difficulty. Wages growth is not going to be up as much in those areas, and I've noticed in previous cycles, as things slow down, there's a flight to quality, and A-grade properties, A-grade homes or investment-grade properties will tend to sell well, but properties in secondary locations, or it's not a judge of people, but poorer socioeconomic areas or blue-collar areas, they tend to flounder a bit more.
They do, Michael, and I think it's also important to look at, whilst those growth corridors will grow, there's an element of hotspotting in there to a certain extent, and they will see growth, but not perhaps on the consistent basis that your suburbs that are closer in will see growth. And I think we've already talked about population growth last year, and Melbourne's topped the charts in 14 consecutive years in terms of population growth. Really isn't forecast to change, and with that massive amount of population growth comes some constraints in terms of infrastructure and the ability for Melbourne to keep pace with that growth. So your outer suburbs are going to be the areas where it'll be that much more difficult to get into the city, so that your inner suburbs are going to command even more of a premium.
That makes sense. And can we finish off with one more bit of congratulations? I think it's 7 years in a row that Melbourne's been voted the world's most livable city. So that's got to also be a factor in why a large percentage of the immigrants are coming to Victoria.
It's certainly not for the weather.
Thank you, Kate, and I look forward to seeing how your forecasts pan out.
My pleasure, Michael.
Now let's head to the Sunshine State and see what's in store for Queensland for 2018. And I welcome Brett Warren, Senior Property Strategist at Metropole. Hi, Brett.
Hi, Michael. How are you going?
Good, thank you. Now, if we look back at 2017, the Queensland market, the Brisbane market, had capital growth of 2.4%, but that was pulled down a bit by the apartment market. So what do you see ahead for Brisbane for 2018?
Yeah, look, obviously those numbers are fairly disappointing, Michael, if you're taking that in isolation. But as we've spoken about previously, it's a very fragmented market. So you have those units that oversupply really dragging the numbers down. Probably houses have probably averaged around the 4 or 5% mark last year. But look, we've actually had the benefit of I guess knowing the better areas and better locations, and some of the growth we're seeing has been between 10 or 15% in a couple of these superior locations, and certainly up around that 7% for the majority of high capital growth areas.
Clearly, then, if you buy the right property in the right location, and then you can even do some extra of adding value, that would be another way of outperforming the markets. I believe this year Queensland is going to perform on average between 4 and 6%, so it's going to do a bit better than last year. That's what our research suggests, as long as APRA leaves us alone and the Reserve Bank behaves itself this year. But how are we going to find those properties that outperform in Brisbane?
Yeah, look, it gets back to the old saying with jobs and employment. It brings certainty to the area, and that brings people from interstate, overseas. Once we have certainty and higher demand for housing, that increases the capital growth for properties. People are prepared to pay more. There's more people vying for those kinds of opportunities in the inner city. So they're the kind of the areas that we're looking in.
Some people may wonder, well, what about the Gold Coast? There's all that new infrastructure, the Commonwealth Games are coming. Should I buy there, Brett?
Yeah, absolutely. I get asked that fairly often. Look, the Gold Coast will be a good market for the short term, and I'm talking maybe 12 or 18 months, but it's still a very volatile market. You're still influenced too much by tourism and things like that. And what happens when, the Commonwealth Games leaves town and all those people leave the Gold Coast? How's that going to affect the economy if the businesses aren't getting the money and the input and the trade and things like that?
The infrastructure will be there for the long term, and that's really good for the Gold Coast. But I agree with you that there isn't enough market depth to support all that new accommodation is going to be left over. So the Gold Coast will be great for tourism, great for the local economy for a short period of time, but not a great property investment. What about the rest of Queensland? There's so much of Queensland. Should I look at regional Queensland or maybe even the outer suburbs where I can buy a house so much cheaper, get more land?
Yeah, look, that's another common question. Even Sunshine Coast to some extent, people are tipping there. And look, those markets generally perform well from period to period, but they don't have the superior long-term growth. There's not enough job opportunities being created. When there's job opportunities, as I said before, there's more certainty in those areas. It brings people to the location. Probably 60% of jobs in Queensland are brought in around Brisbane, and then most of those areas are within that 10 or 15 kilometre ring where those jobs are being created. So the big expansion projects like the Queen's Wharf project, the second airport runway in our hospitals are going to create a huge amount of jobs, probably twice as many jobs as anywhere else in Queensland. So that's where the demand for housing is going to be.
So, Brett, if we're going to invest in Brisbane, what's the good investment?
Look, again, it gets down to your price point, but you definitely want to be within that 10 or 12K ring. Brisbane doesn't have the urban sprawl. It doesn't have the job opportunities outside of that area that create the demand for housing. We lack the public transport outside of that 10 or 12K ring. Our school catchments start to fall away as well. So we want to get into those superior locations where all those boxes are ticked and all those that demand for housing is always fairly high.
Fantastic. So very likely a good year ahead for the Queensland property market.
Yeah, all in all, I think it will. I think it's going to be really positive. Our numbers are turning around. People are returning to Brisbane, into Queensland. Our jobs growth has been at a 10-year high. So if these kind of numbers can continue, it's going to be really positive.
Thanks, Brett. I look forward to seeing how 2018 pans out.
Thanks, Michael. Thanks again.
I'm going to be back in a moment with the other major capital cities of Australia, and I'll give you my take on those. And I'm going to finish off with my predictions of property price growth in 2018. So I'll see you on the other side of this quick break.
If you're looking to get started in property or to grow your existing portfolio, turn to someone you can trust for independent advice. The team at Metropole Property Strategists have been involved in over $2 billion worth of property transactions, creating wealth for their clients, and they can do the same for you. They don't sell property, so their advice is independent and unbiased. Metropole can devise a strategy, their buyer's agents will buy your property for you, or you could use their renovations team, property development or portfolio management services. Arrange a time for an obligation-free chat at metropole.com.au.
Well, let's whip around the other major capital cities of Australia, starting with Adelaide. And like the rest of Australia, the Adelaide property market was very fragmented in 2017, with some suburbs showing 3 times the capital growth of others. Overall, home values increased 3.9% over the 12 months in Adelaide, but apartments increased only by 0.9%. The northern suburbs performed pretty well. They grew about 4.8%. Adelaide's south grew 3.6%, Central Hills 2.7%, and the western suburbs grew by 2.6%. Look, I know some people are suggesting Adelaide's going to now be a good place to get some counter-cyclical investing, but in my mind, that's very speculative. There weren't many growth drivers last year in the Adelaide market. The economy is just ticking along. Jobs growth only increased slightly. So I see little benefit in investing in Adelaide when there are better opportunities elsewhere. Moving even further west to Perth, the Perth property market hasn't bottomed yet, in my opinion. Prices fell 2.6% last year. Now, sales volumes are down, but people are still waiting to see that it's hit rock bottom. And while the market in Perth may bottom out in 2018, in my mind, it's much too early for a counter-cyclical investment in the West. Look, I can't see prices rising for another couple of years yet. See, what happens is once prices reach the bottom, people start to put their houses on the market, more buyers come in, volumes of sales increase, but prices don't. There's also a significant oversupply of new apartments in Perth. Developers are now offering significant incentives and huge discounts. Over 2017, Perth house values dropped 3% and apartments dropped 1.1%. So it's not time yet to buy an investment, but if you're looking to live in Western Australia, no reason at all not to buy, because it's a lovely place to live. Okay, Hobart. Hobart is still Australia's most affordable capital city, and it delivered the highest capital growth over the last year. Hobart grew 11.5%, allowing some of those property pundits, I know there's some people out there saying, I told you so. This was supported by an upswing in the Apple Isles tourism and the economy, but keep in mind it's a very, very small market. So learn from the past. This year's hotspot can very quickly, in fact, usually very quickly, does become next year's not spot. Look, last year, just over 5,000 dwellings sold in Hobart. That's just 1% of Australia's property market. It accommodates 1% of Australia's annual population growth. It's a small place. Now, I'm not belittling Hobart or Tasmania. It's a lovely place to live, but it's not investment grade. It doesn't take much to influence a small market like that to make it go up real fast, but similarly go down. Now, sure, I accept that the local economy is picking up, helped by redevelopment of the Royal Hobart Hospital and upgrades to universities and hotels and retail precincts. And even though some commentators are suggesting it's a good place to invest, I don't agree with them, because in my mind and our research, it shows there's very few long-term rather than medium-term growth drivers. And despite this current fast rate of growth, dwelling values have really only increased in Hobart 27% over the last 10 years. They haven't kept up with inflation. So Hobart's playing a little bit of catch-up, but not the right place to invest. What about further north in Darwin? Well, the Darwin property market's still suffering from the effects of the end of the mining boom. Boy, that was a while ago. And our research suggests that house prices are likely to keep falling for much of this year. Values across the city are 20.8% lower than at their peak in August in 2010. It's not creating jobs. It hasn't got significant growth drivers. So as an investment area, avoid Hobart. We're left with Canberra, which it's always been the quiet achiever. It's performed really well over the last year. But like other parts of Australia, it's a two-tiered market. Detached homes rose 6.8%, and apartments, they're holding back the overall growth because of the oversupply. They only grew by 2.9%. But Canberra's strong economy and above-average population growth will underpin its growth in the market in the future. The government predicts, the ACT government predicts, the population of Canberra is going to grow 6% by 2020, and around 60% of this growth is going to be natural increase and about 40% coming from people from overseas. Having said that, I'm not sure that Canberra's a good place to invest, because the horrendous land tax chews so much up into your cash flow. So there are better places to invest, in my opinion. So they're the major capital cities. Now, I know there are regional areas that are performing well as well. We can't cover everything in this podcast, but because the majority of economic growth, the majority of population growth, the majority of our population live in the big capital cities, I wouldn't fight the trend. So where to from here for 2018? Despite our low interest rates, Australia's property markets are fragmented, as we've just discussed, and are continuing to be that way, driven by local factors, things like jobs growth, population growth, consumer confidence, supply and demand. But clearly we've now moved into the next phase of the property cycle, one of more moderate growth in some regions and virtually no growth in others. But the market needed to calm down. It couldn't keep growing at the rate it did. The boom conditions lasted for close to 5 years in Melbourne and Sydney, and they were unsustainable, and continued growth would be dangerous. It would have caused that bubble that people were talking about. But in my mind, there isn't going to be a bubble bursting in 2018. In my mind, there isn't going to be a crash in 2018. Sure, house prices have lost momentum, but there's no sign of a bust. Instead, there are a number of factors that are likely to support a soft landing, with APRA and the Reserve Bank having done a really good job slowing down our markets, yet keeping interest rates low. On the other hand, there is likely to be some pain in the oversupplied new and off-the-plan markets. To finish off this longer show, where we've gone around Australia, so there was so much to cover, I hope you don't mind it took a bit longer than normal, I want to give you my predictions for property values over 2018. But before I do, I want to remind you that I'm going to be doing a series of seminars in 4 capital cities. Go to propertymarketupdate.com.au, propertymarketupdate.com.au, and rather than paying the normal $99 for a one-day training with Dr. Andrew Wilson, Ken Race, myself, and local property experts, put in the coupon code PODCAST, and I'd love you to come along as my guest. We're going to go into much, much more detail about what's going to happen to the property markets, but where I think property values are going to be affected will be depending upon what happens to interest rates, even though I've explained a few moments ago that I don't see them changing this year, or what APRA does. But I don't think APRA is going to tighten the screws, nor do I think it's going to loosen the screws yet this year. Too early for it to do that. Or if there's any unforeseen event overseas. But if all else being equal, I see property values finishing higher at the end of this year than they started. But growth's going to be at a slower pace. I think the hottest market's going to be Hobart. It'll again perform well, could even do up to 6, 7, 8%, but this is going to be encouraged by speculators chasing the next hotspot. And remember how hotspots become not spots. So with few long-term growth drivers, I'd avoid the Apple Isle. Melbourne's probably going to be the second best performing market this year. Houses, townhouses and villa units are likely to be the best performing dwellings, growing somewhere between 6 and could be even up to 10% in good suburbs. Canberra's also going to be a steady performer with 4 to 7% growth, but excessive land tax is a strong disincentive to property investors in our nation's capital. And also, I'd be avoiding the apartment market there where there's an oversupply. Brisbane's market's going to move up a notch this year, and well-located homes are going to do well, spurred by jobs growth, infrastructure growth. So well-located properties should do well above 5-6%, and overall the market's probably going to do 3 to 6%. Adelaide's going to, again, underperform the other cities, growing somewhere between 0 and maybe up to 4% in some locations. And while the Perth market's near its bottom, I don't think we're going to be seeing strong capital growth for quite some time there. And Darwin property values are going to keep dropping in 2018. Week by week, we're going to be sharing with you our thoughts, my thoughts, and those of my team of experts that I deal with, talk to, mastermind with, and I'm going to keep you updated on what's happening in the property market. So thank you very much for again joining us, and I look forward to a great 2018, sharing my thoughts and ideas, answering your questions, and learning about your journey.
Thanks for listening to this week's episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect and pass on their wealth through strategic property advice. If you got value from listening to this podcast, please leave us a review and we'll read it out on a future show. Just go to michaelyardneypodcast.com/review and it will take you over to iTunes where you can enter a review and let us know what you think. We'd really appreciate it. If you don't already subscribe on iTunes or on your Android phone, you'll find us there as Michael Yardney Podcast. If you'd like to gain instant access to the show notes or a transcript of the show, head across to michaelyardneypodcast.com. Watch out for our show next week. You'll learn some new ideas about property investment, success and money in around 20 minutes.